You know how when you're in school, you have this number that follows you around everywhere, your GPA? Well, adulthood has one too. It's called your credit score. Your credit score affects where you live, what you drive, even how much you pay for your phone plan. But what exactly is a credit score? And why does everyone keep saying FICO like it's a secret society? Today we're going to break it down. A credit score is a three-digit number that predicts how likely you are to pay back money you borrow. The most common type of credit score is the FICO score. That's the one lenders use for things like car loans, mortgages, and credit cards. Scores usually range from 300 to 850. Higher numbers are better. Lower numbers, more expensive life gets. Your credit score isn't random. It's made of 5 ingredients. Think of it like a recipe for your adulting GPA. The first ingredient? Payment history. Do you pay your bills on time? This is absolutely the most important one. The second one is what they call credit utilization, this is how much of your credit limits you're using. That would be the limits on things like overdraft protection lines of credit and credit cards. The third one? Length of your credit history. That's how long you've actually had accounts open that are reporting on your credit report. The fourth component is your credit mix. Having a variety of different types of credit history, like a car loan and a credit card, and maybe having some real estate loans, helps your credit a little bit more. Also, the fifth factor is new credit. When you take on too much new credit in a short period of time, it can start dinging your credit score negatively. Your credit score affects more than you think. It can change your interest rates, your car payment, your ability to rent an apartment, even your insurance premiums. A higher score means you pay less for the same stuff. A lower score means life gets more expensive. Here's the good news. Your credit score is not permanent. You can build it, fix it, and glow up your financial reputation. Here's 4 tips to help build your score or rebuild it. First one, pay on time. Even if you're just making the minimum payment, make sure that payment is on time and made by the due date. Tip number 2, try to keep your credit utilization low. Again, this is how much of your credit cards and lines of credit you're using. Under 30% of your limit is ideal. Tip number 3, keep your old accounts open if possible. Having some older credit lines on your report is going to help your score better. With regards to credit cards that maybe you don't use because they have a higher interest rate on them, if they're not costing you anything with an annual fee, it makes sense just to keep them and not use them so you can keep that credit length. Tip number 4, don't apply for a bunch of cards or a bunch of different types of credit at once. Tip number 5, use credit regularly but responsibly. Your credit score comes from your credit report, a detailed history of your accounts, payments, and balances. And here's something every adult should know. You can get a free copy of your credit report from all 3 major bureaus once a year at annualcreditreport.com. It's the official site, not one of those sketchy ones with pop-ups. Checking your report helps you spot errors, fraud, or old accounts you may have forgotten about. Not all credit scores are the same. The one lenders typically use is the FICO score. You might also see something called a Vantage score. That's another model, often used by free apps, things like Credit Karma, or maybe apps that are included with your credit cards. They're typically similar and usually have most of the same information in them, but they're not identical. If you're applying for a loan, the FICO score is the one that really matters. Everybody seems to have advice about how best to manage your credit score. There's a few common myths, though, so let's go ahead and bust some of those today. Myth number 1, checking your own credit hurts your score. Not true. It doesn't. When you check your own report, it's considered a soft inquiry rather than the hard inquiries made by banks. Myth number 2, carrying a balance helps your score. Not really true. Paying it in full is best. Use the card, pay it off. Use the card, pay it off. Build that credit history, but don't carry more of a balance than you want to or need to. Myth number 3, you need to be in debt to build credit. Not true. You just need to use it responsibly. Again, use it, pay it off, do not utilize too much. So that's your credit score, your adulting GPA. It's not about being perfect. It's about being consistent. Know your score, check your credit report at annualcreditreport.com, and build good habits. Your future self will thank you. If this helped, hit like, drop a question in the comments, and tell me what money topic you want to hear next.